You do want someone who's been around the traps. And when it comes to investing, if someone hasn't lived through a serious downturn, do they really understand investing? On the other hand, you want an advisor who's going to be around for long enough. So you can't have 100% of both. What you want effectively is an experienced advisor working in a business that will survive them, so that there's a structure behind them, there's a team behind them, and when they retire, there's someone coming along behind them. So where was I going with that?
I don't know, but cardiologist,
but the point being that you need to, there is an element of trust in this decision. So you need to look for the flags of trust.
Yeah, green flags.
So what are the green flags and absence of red flags? Traditionally, this was largely done by referrals. As the number of advisors shrinks and the number of people who need advice grows, that's becoming harder to do because there's lots of people now who have money that didn't have it and don't move in circles with other people who have advisors. The golf club was the classic place for referrals, and so that doesn't happen anymore.
So if I go to Glen James as a financial advisor, I'm not saying, hi, I'm Glen James, I'm your financial advisor. By the way, we want you to set up a self-managed super fund, and we're going to put the lion's share of your money into the Glen James investment fund, and I personally select the best investments within that. And
that was a big problem 15, 20 years ago, where you had most advisors were licensed through what we call vertically integrated businesses, where they had an advice business, they had a funds management business, they had an insurance business, they had a superannuation product, and you were very likely to get recommended in-house products. That's becoming much less of an issue, but certainly if you're getting in-house product, you should be asking questions. That's not to say that all in-house product is bad, but you do need to be aware of it. And most losses have occurred where there's a concentration of ownership of the product. So most times where you see a failure of a product, it's largely associated with the relationships around that sale product. So, so at LifeShopper we use all of the big fund managers, largely index managers, so Vanguard, BlackRock, State Street, all very reputable brand names, none of whom we're related to. And assets are generally held by a third-party custodian.
Question, I think a red flag is potentially when they hero returns.
Yes.
And we can beat X, Y, Z.
That's right.
Now, there could be by the way, factually speaking, what we've recommended here, if we back tested it across Australian Super, it is actually 1.5% more.
Yep.
Another trick, make sure they're comparing the same asset allocation.
Yes.
Not saying, our fund did better, because it's higher risk.
Yes.
We're not interested in someone putting pressure on, heroing that we will get you 13% a year guaranteed. We don't like the G word.
That's right. And, that's a natural human thing. So humans naturally want to be able to make more money with less risk. So if you hear that message, it's an attractive message.
Yeah.
But it's also unrealistic. That's not how the real world works. That if you want more return, you generally have to take more risk. And so there is a need for skepticism. So if someone's saying, I can get you X%, especially if it's followed by the word guaranteed or certain, well, if you want to guarantee, it's pretty hard to get more than the cash rate. So if someone's guaranteeing you more than 5, there's a flaw somewhere. But it is a natural human reaction to go, I want more for less. And that's not how the world
And
works.
here's another red flag, everyone. When you're going to a financial advisor or a property coach, you can go to John Pigeon, who hosts our property show, and get coached of how to buy an investment property to build wealth for the future, right? All legal, all good. From your own personality thing, don't go to a professional with their solution to make all your problems disappear and catch up the 15 years where I haven't put money into super. That's right. Because that's when greed can walk in the door.
Yeah.
And that's when something that follows greed is stupidity. Then after stupidity is broke.
That's a good one, yeah.